the top people. So the Americans' way of life and the West will never be the same after this event. Now, this is not just one event. This is multiple events happening right now. Okay, we have a lot of economic events that are going to be happening. We have a lot of geopolitical events that are going to be happening all at the same time. So I've got a lot to cover. It's going to be a very action-packed episode today. And I should have done my mic check with typing number 1 before I went into it. But without further ado, let's get in today's video. So first things first, what I want to cover, GDP now. Now, this is the forecast that the Federal Reserve themselves put out to tell us what they think is going to happen to the economy. Now, something massive just came out. They just put out their latest estimate, and you won't believe what they just said, everyone. So the GDP now model estimates for real GDP seasonally adjusted annual rate in the fourth quarter of 2023 is only going to be 1.2%. And guess what? That's cut in half from 2.3% on October 27th. So that's right. They've dropped the future economic growth rate in half from 2.3% to 1.2%. This is after this morning's construction spending release from the U.S. Census Bureau and manufacturing ISM report on business from the Institution for Supply Management. The now forecast of the fourth quarter real personal consumption expenditures growth and fourth quarter real gross private domestic investment growth decreased from 3% to, listen to this, minus 2.2%. And I've got so much more news to show you that things are turning for the worse. So respectively to 1.5% and 0.28%, while the now forecasts of the contribution of the change in real net exports to the fourth quarter real GDP. So put it in simple layman terms, the economy is going to be tanking in Q4. And like I said in this report, the ISM, this is the country's manufacturing and their orders, what businesses are ordering, this is plunging. Now, anything below 50 is contraction, but this had a much worse contraction than expected. So we can see here, the PMI, that's gone to 46.7 from September 49. Again, anything below 50 is contraction. New orders, that's a big miss. 45, this is what, companies are ordering. If they're not ordering, people can't spend. It's 45.5. September was 49.2. Production, it's down to 50.4 from 52.5. And employment also tanking as well. 46.8 from 51.2. Now, you want some more indicators. I've got much more indicators to show you. I'll adjust this chart here so it's easier for you to read and follow along, and I'll move myself here. Look at this. This is a great indicator of recessions because we all know that the data is becoming a bit politicized these days, and it's not becoming very trustworthy. So we have to look at some other indicators to see what's really going on. Well, look at this. The trucking sector employees are laid off. We can see in the 1990s when we saw a pivot with this, we saw a recession. Also in 2000, when the trucking sector layoffs started to happen, we saw a recession. Same thing in 2008, huge contraction. Same thing in 2020. And look up here. The exact same thing is happening right now. We're seeing a big contraction in the trucking sector, and this will flow on to the economy because the reason why people are getting laid off in the trucking sector is because people aren't ordering stuff. If people aren't ordering stuff, then that means someone else's income is going to be gone and they're going to be laid off as well. That's not all. Look at this. Remember I said consumers' balance sheet is so strong? Well, not according to this. Excess savings have likely been depleted. So we saw in 2021 and 2020, the savings rate absolutely exploded, but now we're seeing a sharp contraction. You want more proof? Credit card spending is weakening. Now, we can see it is still above pre-pandemic levels, but we always have to look for the sign and the trend reversal. And right now, it is reversing and reversing quick. And probably the biggest warning of all we need to look at is what are the banks doing, okay? The way the economy works now is on debt. If people aren't taking on debt, they're not spending, because what people do now is they spend all their money and then they take on debt and spend their debt. And that's how new money is created in the system. So credit contraction is here. We can see we haven't seen this kind of contraction right here since 2008, and it is accelerating. And this is why the Federal Reserve is so worried. Okay, if we continue to see a sharp drop in lending in the bank sector, this will flow onto the economy. But wait, there's more, people. Okay, look at this default rate above financial crisis levels. So we can see here, this is for credit cards. We can see what happened right here in 2008. We have absolutely blasted past 2008. And the reason for that is because interest rates have gone up so aggressively, and it's caught off a lot of consumers off guard. Not only that, but inflation is so high, people are having to use credit cards to buy the basic essentials, and they literally don't care. They default because they need food on the table. Without food, they can't survive, so they'd rather default on their credit card than not eat. Now, another worrying sign, what I've been talking about, commercial real estate. Again, I'll adjust this chart so you can see a bit better here. I'll move myself here so you can read this as well. The office vacancy rate is getting very, very high. So we can see we haven't seen this kind of level since 2005. Now, we got another news report today that the US continues their jobless claims rise for the 6th straight week. So this is all going hand in hand with the GDP now forecast. Not just this, but Charles Schwab is cutting as many as 2,000 jobs. We're seeing bank after bank announcing massive cuts. Morgan Stanley, Goldman Sachs is doing this as well. Now, another event. So that's one of the economic events, but another geopolitical event that's happening right now that's even got the Bank of England worried is a conflict between Israel and Hamas. And it poses huge risk to inflation, especially if we get in a direct conflict with Iran or more Middle Eastern countries. This could cause a black swan event to inflation, could cause oil to spike out of control. Okay. And what we have to admit is the US and the West is not as powerful as they were a few decades ago. The US is heavily in debt, and the East, the Middle East, sees this. China sees this, and they're just biding their time. They're waiting for the US to drain all their military supplies, drain their oil reserves, and get so much in debt that they will not be able to afford to fund another war, unless they just pretty much print the dollar into oblivion. Now, again, like I said, don't look at the stock market. Nigerian stock market also hit a recent high. But like I said, their inflation is at 20%. So what it is it's not so much that the stock market's so strong, it's that the dollar is losing value. Now, what we also have happening right now is the Federal Reserve is saying they're doing QT, quantitative tightening. They're tightening the monetary supply. But at the same time, they're bailing out the banks. So look at this. Bank bailout, this is pretty much the Fed's bank term funding facility, hits another record high. And this is happening every single week. We can see here the Fed's balance sheet did contract by $41 billion, but it has hit $109 billion. And this is pretty much happening every single week. This is meant to be an emergency funding facility. So if the banks are still tapping record amounts, we must be in a financial crisis, but they just don't want the public to know about it. They're bailing out the banks behind the scenes every single week at the tune of $106 billion. Okay. Now, something that's also worrying for the stock market that could lead to competition for the stock market is yield from cash now exceeds that of stocks. You see a lot of people invest in dividend stocks, but really, for the risk, it doesn't really make sense right now. With the 3-month treasuries, you can get over 5% return. And a lot of people are going to be dumping money in treasuries compared to stocks. So that poses some risk for dividend stocks and other stocks as well. But again, what I wanted to talk about why you have been noticing that the standard of living has been getting so much worse in America and in the West. Well, I've got one chart here to sum up why it has been getting so bad and it's about to get much, much worse. So look at this, everyone. This is share of national income earned by the bottom 50%. And that's right, it's a one-way street. We can look here. It was pretty good relatively in the 80s. That's why a lot of people said, you know, people could afford a house. The husband could provide for the family on one income. Not only that, the family would probably have about 3 to 5 kids, where now most families might only have 1 or 2. And we can see the share of income by the bottom 50% for the past 4 decades has just been plummeting and plummeting lower. This is because of the unlimited bailouts to the mega corporations, the unlimited bailouts to the banks, what the Federal Reserve is still doing today. Okay, they're still bailing out the banks like I'm showing you here. Because of all these unlimited bailouts, the rich have got richer and the poor have got poorer because they keep sacrificing the middle class to keep this financial Ponzi going. This is why the Federal Reserve did not lift interest rates at their meeting yesterday, because they know if they do, well, the stock market will crash and banks will fail. So they would rather have 5% CPI when real inflation is 10% than risk the banks losing their monopoly and all these mega corporations tanking. So everyone, again, quick recap. Okay, GDP forecast now is saying that GDP for Q4 is slashed in half to just 1.2% from 2.3%. Okay, ISM manufacturing index plunges to 46. Trucking sector is laying off employees. Excess savings have been depleted. Credit card spending is weakening. Credit contraction is here. Banks are not lending. Defaults are right now higher than 2008. Office vacancy rates is higher than 2005. Bank of England says there's going to be a lot more risk between the Israel and Hamas war. And like I said, the share of national income by the bottom 50% is tanking. So I know probably what you're thinking, well, okay, what can we do? Well, this is what I always tell you again and again. You need to do whatever you can to not be part of these statistics. Pay off that debt, especially with interest rates so high. Don't worry about investing until you've got all your debt besides your mortgage paid off. Anything with an interest rate above 7%, pay that off. And there's no easy way out of this, everyone. I wish I could tell you, just click this button, buy this asset, and it'll go up 100x the next day. Yes, investing in, for example, gold, silver, Bitcoin is a long-term wealth building strategy. But if you really want to get ahead, it's going to take a lot of hard work. You got to find a way to get either a second job, but what I think is even better, start a side hustle. Now, I can't tell you exactly what side hustle to do. What I did is I started YouTube as a side hustle because it was what I was passionate about. And now it's became my full-time job. You may want to do YouTube as well, but you may have some other skill that you can do as a side hustle that has the potential to replace your job. And then that way, instead of only getting a 2-3% pay rise when inflation is 5 or 10%, you can charge what you think is right or what you think is fair for the market and get ahead of inflation. That's really the only way to get out of the system, people. The system rewards people to create businesses, and it doesn't reward loyal employees that stay at the same company for 40 years. That's just how it is. But again, do something that's low risk. With online, you can start a lot of businesses that take no capital at all. You don't want to go ahead and open a gym and spend $200,000 on gym equipment, and then the economy tanks and you lose all your members. There's a lot of businesses you can start with under $1,000. But everyone, this has been my warning for what's going to happen in the economy. What do you all think about this? Let me know down below. You're awesome. I'll see you all in the next video.